I'm going to now hand over to each panel member to give us a short introduction of themselves so that we have some background on them. So, Ernie, if you'd like to start us off.
Yeah, sure. My background, actually, I go stockbroking, retail stockbroking, going back 30 or 40 years. Then I moved into banking, and unfortunately, it was an industry I didn't actually enjoy. So I'm now with a scale-up who we focus mainly on self-sovereign digital identity, where the individual actually own their own data and their own identity. So, yeah, I'm not sure if any of you saw it on Friday, but we're actually going to be building a cryptocurrency for the Dubai government that's ready for 2020. So that's just one of the things that we're big in the crypto space. I actually am a founder member of the UK DCA, which we're now, because there's so much interest, we're trying to build our membership and speak to regulators and exchanges and to get a greater voice, a collective voice in the industry, so that we can actually influence regulators and governments and how the digital currency should be regulated.
Okay, I'm Malcolm Pally. I'm the Executive Chairman of Coincilium Group. My background is sort of more entrepreneurial than specifically technology. I've been involved in startups before they were even called startups. It was just going out and starting your business. Leisure, industry, travel, subsequently mobile telecoms, and then got, obviously, as many people did, I got sucked into the dot-com boom. I came across blockchain when it was not called blockchain. It was all about Bitcoin in 2013, and I immediately went looking for an incubator because I figured the model with the dot-com boom was all about incubators and accelerators. Identified a couple of guys who were running what was at the time Seedcoin, brought them to London, and with various other parties we eventually reincarnated into Coincilium, and the rest is history. So we're here. We're listed on Next in 2015. I've been with the company under subsequent to a management change effectively this year, and it's a really exciting place to be. Very excited about what we're doing. We predominantly have been, I think, seen as an investor, as an investment company, stroke fund, whatever you want to refer to it as, sort of some of the parts kind of thing in terms of valuation. But earlier this year we took the initiative and the decision to be a little bit more proactive, more focused on venture building. So our profile, you'll notice, will be perceived as a venture builder with investors, which means we'll have our own propositions. One is an ICO, a token sale, as is the trend. We're focusing on Gibraltar as the place where we believe the operationally regulations are going to be conducive for that kind of setup, because this space innovation has been driving it, but we feel that regulation, the right kind of regulation, is where it's heading.
So George has unfortunately lost his voice, so we'll keep his speaking to a minimum. So George is the CEO of Kryptonite One PLC, a publicly listed blockchain investment company focusing on early stage funding, and has been involved in the cryptocurrency community since 2011. Apologies that it's a little bit briefer than the other people's biogs.
Hi there. I'm actually I'm up here listed as director of Retortal. I'm not wearing my Retortal hat today particularly. My background is software development. I've got a digital agency that's been running for probably 20 years now. That branched off into a social media company called Retortal, which is a reasonable sized company. We sell to brands like Avon, Herbalife. We've got it around the world with well, hundreds of different countries, different languages, and we've got massive scale. So I've taken my user interface experience and sort of mass adoption of software experience and keyed it into something that I've been keen on for a long time, which is cryptocurrency. It was a personal interest. I had a whole team of developers, so my tinkering around with blockchain became slightly more than that. I started involving more and more of the Retortal team, and we started working out that we could do something really new and really different. So I'm actually wearing my Electronium hat today. So we're in the middle of an ICO. It's called Electronium. It ends on the 31st of October. And I think my capacity here on the panel today is to talk about actually being in the middle of one of these things. What's happened? It certainly is the Wild West. We're constantly under a security attack. People are threatening us. We've been told we're going to have our servers taken down unless we pay a ransom every single day. It is the Wild West. So it's quite a fascinating place to be. In the last 3 weeks, we've raised $7 million, and it's really taken off virally. So exciting times.
How do you define an ICO?
Is there any lawyers in the room that are going to put me in handcuffs if I define it to I think an initial coin offering, which is what it stands for, and an often called a token sale. Our lawyers suggested 2 weeks before that we had to change it from ICO to token sale. Lord knows why. I'm sure there will be people here that could answer that. But effectively, it's a crowdfunding exercise to raise money for a venture. I think that it started off being something that was a coin offering. So the idea was that new cryptocurrencies were raising money to launch, hence initial coin offering. And it's now become slightly vaguer than that, I think, with people raising money for virtually any project by including a token of some kind within the offering and then raising money, because it's been an exciting space. And there's a great deal of interest in the space, and there's money being made in the space, so people are piling in. But there's also a great deal of risk and some fraud.
Thank you. Same question to
Yeah.
to you guys.
What is an ICO? I agree with everything you said. The term ICO probably came out because it sounds a little bit like IPO, although there's a distinct difference is that the holders of the tokens, the coins, whatever they are, haven't got the same kind of rights or any rights at all in general terms compared to those who own equity in a company because you feel it's part of your company. So the next thing is that why do people buy them? What's the point of them? And that's the crux of it, because that's where you sort of differentiate between what is a legitimate token sale and what is just an excuse to sell some magic beans to raise some money without giving anything of meaningful away to those who are buying these tokens off you. So the utility of the token is a very important factor. If Giovanni wants to open a sandwich shop and he goes to all his mates and says, I'll sell you half-price sandwiches, you just pay me the money up front and I'll give 10,000 sandwiches away, that utility is like a pre-sale. If Mr. Wenger wants to build a new stadium for his football team to play at, then he can use a combination of functions, debt, equity, and maybe sell some debenture seats to some of his fans. That's a legitimate use of a token. There are other sort of hybrids and sort of other aspects, but the one that says, I just want to raise some money, don't want to, if I can do this without giving any equity away, then let's find a way of doing it. That's coming about it from the wrong direction. So that's where we're at, and hopefully regulation down the line is going to be able to draw a clean line between what's right and what's wrong and how they work, and hopefully we'll all end up in a better space where some of the cowboys are sort of being moved to the sidelines.
There's not really a lot I can add to that. I mean, the reason why the regulators or lawyers don't want people using the word coin is because it's got to be, at the moment, because it's unregulated, not to be seen as an asset. So you're not trading an asset, you're trading something that's untangible. And therefore, because it's unregulated. I actually agree with everything that's been said. I mean, I am so pro that this comes under regulation, and it's not far off. And just on this point, there's a lot of myths out there that the Chinese have banned ICOs. They haven't. They're actually just looking at it. They're suspended ICOs. I was actually talking to someone last night, really interesting guy, who's doing his own ICO in Silicon Valley. He's Chinese. His company's got 10% investment from Tencent, 10% investment from Alibaba. And I said to him, well, if it's banned in China, how are these guys investing? So it's okay for the Chinese to invest in ICOs outside of the country. And he did tell me that the PCOB actually came and visited him about a month ago, just to find out how it works and are they adhering to the SEC rules. So they will be going back, and he expects sometime just in the new year that you will see China, Korea back online again. So don't always listen to what the press tells you.
I'll see if this works. Sorry, I lost my voice this morning. The only point I'd like to add is that a lot of these projects are completely open source. And when they're completely open source, it's very difficult to have any IP of any kind, because these projects are infinitely copyable. So really, the token is the asset of value in the project. And when companies, startups came to VCs and said, this is what we'd like to do, well, the VC said, well, there's nothing I can buy here. So they went to the community, and that's basically how it all began. And so just looking at ICOs, generally I'd say that the token is clearly the most important asset of the project. If you can take the token out of the project and the project still works, that's not something I'd be interested in investing in. It's the key component to the entire thing, and it's what builds the network effects. And this is all about network effects. Because these things are infinitely copyable, there's no siloed IP, which is what I said. But so that's the key thing to think about here is the fact that it's the token itself, and equity sort of doesn't really even come into the picture.
Just to add to that, so can you talk us through your investment approach on a token offering?
Yeah. So there's so much going on at the moment. Effectively, there's a lot of trapped value inside. The main platform is Ethereum. There are others, but there's a lot of value in there that's happened because of the amount of excitement that this platform has produced. And because of that, people are wanting to keep the value in the system and put it to use in other projects. So one way to think about this is the fact that Ethereum as a platform is funding itself. The people behind it who did so well in the initial movement are now putting that finance to work on all these other projects that are coming to play. So effectively what we do is we look at the team behind the project, and we look at where they've come from and how long they've been in the space. And then we look at what the project is within the ecosystem. Is it in a busy space? Is it in a space that is yet untapped? And then we'd look at what are called the token mechanics. So how much effort and time has been put into designing the token, and what role does the token play inside the project? And then on top of that, there's various things you can look at into coin sentiment, the hype cycle, their marketing spread, like how far has this project. But as there are so many projects coming in, I'd say the first step from Kryptonite One's perspective is basically who hands you the project. Because I get 50 projects on my LinkedIn a day. And really what it's become is this network of communications between the investment houses that are investing in these things, that are beginning to pass projects to each other, saying, look, we've looked at this is good. And at that point, we begin to take notice almost, because there's too much out there.
I think that the point about equity was really good, because with regulation, if we're avoiding it, it's got to work exactly as it is now, but with regulation, so it can't change the fundamentals. Exactly that. If you took our limited company, and we're running it all through the UK, actually, by the way. I know that Gibraltar is probably the mode of choice now, but we're running it all through the UK, through a UK limited company. But actually, the shares in that company really haven't got a lot of value in comparison to the tokens themselves, and that's the whole point, is on a distributed model. So if there are no borders, and actually if I drop dead and the limited company disappeared, our blockchain will still exist. So that the value isn't in that company, the value is in whatever the token or coin is.
I'd like to ask Ernie, so could you just give us a bit more of your thoughts on how you think the market should be regulated?
Again, last night I was at a coin scrum, And this is the first time in 4 months they actually put a health warning up on the board saying we are not an IFA, you invest at your own risk. It's very high risk. That's the other thing. People at the moment, it is very high risk investments because it's unregulated. So I'm working with the London. I'll hopefully be working with the London Stock Exchange. They're looking at ways to use the ICO market. So we need to speak with regulators. We need to speak with lawyers and get a consensus. A sensible consensus as how this market grows. And I personally think it's a great thing that I think it takes, 6 months to actually get an IPO up and off the ground. The beauty of this is, with an ICO or an ICO, is that you haven't, the time span is a couple of months. You haven't got to worry about VCs. You haven't got to worry about your loss of equity and the control of your startup or or your company. So there's a lot of issues. It's an unregulated space. I think that one of the biggest issues is what people are worried, because there's no investor protection at the moment. So there are lots of scams out there. Unfortunately, we're used to the Wild West, but that actually proves that it's going to be successful. When the criminals get out there and actually attack something that's good, it's going to come off eventually, because regulation will come. So therefore, I'm very optimistic about the ICO market. There's a lot of potential for fraud at the moment. Regulation doesn't actually get rid of it, but it does protect the consumer. And as I say, when I go to these Bitcoin and blockchain meetups and ICOs, they're very naive still, very naive, that they don't realise that as soon as they hit the retail customer, they will have to be regulated. So they're sailing very close to the wind. So this is where the lawyers are getting involved and actually looking, especially around the wording and things like that. So when regulation does come back, people will be hit retrospectively. So if you're thinking about ICO, do it very carefully and go to the right people, get the right advice. Basically that's really what I can say.
Do you think it's really possible to have effective regulation of these companies? And could regulation just kill this market?
I think the wrong kind of regulation could kill the market. Well, I don't know, actually, having said that, Bitcoin's not been very good at dying. And I don't think any of the cryptos or the blockchain is good at dying either. So it'll probably stymie it, maybe not allow it to reach its full potential as quickly as it could. But the most important thing is appropriate regulation, and you can't really regulate something until you understand what it is you're trying to regulate. And at the moment, I think there's been, up till now, there's been a lot of head scratching. I think perhaps inertia as well from regulators, because they don't know what to do, because they feel that likely or not, if they do the wrong thing, it's just going to make it worse, which, is usually the case. So the right kind of regulation is really the key. I mean, we've got some ideas of what we believe should be the right kind of regulation, and light touch is a word, but a phrase, but it's not. It probably doesn't sort of identify what you're doing. It could be allow people to just get away with things. I kind of think that the treating these businesses like businesses, using the token sale as a means to an end, and as George, in my view, quite rightly pointed out, the strength the token mechanics is the key. We refer to it as well as a strength of protocol, which is what is that token doing? If you take that token, as George said, out of the equation, does the whole thing fall apart? And does it just mean that it was just a means to an end to raise some money with cheap money? And that would be the first thing that you'd actually fall. I think you need to identify in terms of perhaps even regulation, standardization of procedures. A lot of token sales, if their focus is on the development and the token for the business, and not so much focus on the capital structure of how the business is actually set up, because it is ultimately going to be a business at the end of the day, or it's supposed to be. So we're looking at sort of, you know, how much share capital should a company have that raises 20 million? Should it be able to raise, you know, should it have a 500 quid? Means if it gets sued for 2,000, 10,000, a million, it's just going to walk away and leave the token holder stranded. So, you know, I think that area's got to be looked at in terms of, it's probably not called regulatory capital, but ring-fenced, you know, amounts of the proceeds they're raising. Standardised procedures for performing the ICO, because everyone does their own thing, and maybe there are some areas where there could be some standard formats. Yeah, those are the kind of things. I'd just like to touch on very briefly our criteria when we invest is that we've only actually invested in 2 token sales to date because we have a portfolio of other companies, and we're moving into the space quite pragmatically. We're not got we don't trade. We're not token traders, so we don't have those skill sets to actually sort of create multiples and get out very quickly on those situations. But we look at the businesses from a long-term perspective, and so our main interest is in the equity, and we like to also get tokens as well, but we look at the tokens as a bonus to the equity. And we take the view of, if they're creating this business using the token sale as the means to the end, everything else fits our criteria, and the equity at the end of the day should be worth something because they're building a proper business. At least that's the plan.
You must do your due diligence. You must research. If you want to invest in an ICO, you must look at who's actually doing it. What's the team? The board team. Have they been around a long time? Are they? Do they look like it's a scam? And if it looks like a scam, it probably is a scam. You must read their white paper. I used to hear stories that literally one piece of paper and people would raise £1 million on it. I mean, I'm amazed that actually people would commit. But unfortunately, people do. The greed factor kicks in because they've seen what's happened with Bitcoin, and they say, oh, it's great here. I can now actually get on board with this type of token coin. Don't always let the greed kick in, and only invest what you can afford to lose. Don't overstretch yourself because you think, oh, this is going to make me billions. It probably won't.
Just something to think about is that because these ICOs are effectively permissionless, anyone can take part in them. I sort of see the world's power structures in a bit of a sort of game theory dance, because as one country puts a blanket ban down, a neighbour says we're open for business, and there's clearly a lot of money in this space, and I don't even think we've begun to see exactly how big this could get. And so, much in the same way that you're interested in Gibraltar, there's Zug, Crypto Valley. There are places all over the world that are opening up their doors. So how, just as a sort of point to think about, how does the power structures of the world deal with something as powerful as decentralized technologies, which everyone can gain access to? And one last point I'd say is have a think about how many millionaires Ethereum has made versus something like Facebook. Here you have effectively anyone could access that ICO, anyone in the world, from 15-year-olds up to whatever age, and it's produced something that's quite remarkable, and that's something that I personally wouldn't like to see go away. I'd like to see everyone be able to access, but I agree there has to be a line in the sand somewhere to some degree. But those would be my 2 points.
Yeah, I'd just add one last thing to that, if I can, which is there's already existing legislation, of course, for fraud. And the reality of it is the bad eggs in the ICO game are, generally speaking, committing some sort of fraud. They're claiming they're going to do something and they're not, or they're misusing the funds in some other way. So I would suggest that there probably is some legislation that's already in use, but what will happen is it just pushes, if you over-regulate one market, it pushes it straight on. The internet is borderless, so the criminals will just adopt a new zone to work from. I think you're right.
Regulation to the practical, and if we can ask you a bit about your process with Electroneum, and what was unique to that and how it was different from some of the other ICOs.
Okay. Well, what we looked at, I mean, as I say, my background is with large numbers of users working in a way that we have to make the environment easy for them to understand. But my personal interest was in cryptocurrency, and I don't think easy to understand and cryptocurrency go together particularly, and I don't think accessibility and cryptocurrency go together particularly. So I really, really wanted to get a way to give cryptocurrency to a mass market. Now, I don't know if it's worth Googling this. There's a study by Cambridge University, came out in May, that suggests there's about 3 million Bitcoin users in the world, which is a tiny amount of people considering the brand power that Bitcoin has. Every article that talks about cryptocurrency talks about Bitcoin, and that's global in every language you can imagine. So we thought, well, why is there so few users? But I don't know how many of you are Bitcoin holders. I suspect quite a few of you are, but you probably think, well, it wasn't too hard. I had to send 3 copies of my passport, my driving license, 3 bank statements. You know, actually, when you think back, you're like, actually, yeah, what wasn't really, really easy to get. And the borders to getting it are coming down, but it's still not super easy to get. And then when you look at mining these coins, which I don't know how familiar you are with the terms, but people can mine cryptocurrencies depending on how the blockchain works. And they have some sort of quite powerful computer that's churning away, generating them some coin for being the operator of the blockchain. See, because blockchains are decentralized, there is no big central server stack somewhere running them, that you need to have somebody that actually provides the computing power. So that computing power comes from the crowd, and the crowd are using or giving their computing power because they're being rewarded by the blockchain. So those Bitcoin miners are not just getting Bitcoin for nothing, they're getting it because they're the ones who are actually adding blocks to the blockchain. So what we wanted to do was take that and say, right, how do we get that into a phone? Let's have 2.2 billion mobile phone users mining. Let's get this into the hands of every teen up to middle 20s, you know, and access a proper mass market. And there's an awful lot that went into trying to make that happen in a really smooth way. We think that we've now done it by using a dual algorithm in a blockchain. It's a bit dull to talk about probably, but anybody who's interested in the tech, we've got it in our technical white paper. We've got an overview white paper as well, which is what people were discussing. ICOs tend to have this white paper that discusses exactly what the company's going to do. So that's kind of what we're trying to do, trying to take cryptocurrency to a mass market. But we're not going head to head with Bitcoin. We don't want to say, right, stop using Bitcoin, use us. We just want to get cryptocurrency into the hands of people that have never touched cryptocurrency. They've never had it. Well, no one's ever going to touch it. But you get the idea. No one's ever had. No one who's ever had it. They're all interested. They've all seen it in the papers. So we're like, okay, how do we get them some? And we've got a way of getting a small amount of cryptocurrency to a lot of people, which should open their eyes to other things. And I suspect it'll be very good for Bitcoin, be very good for Ethereum, be good for the other cryptocurrencies as well. Because once your eyes are open to it, you tend to diversify your portfolio.
Thank you. As a corporate M&A lawyer, I day-to-day advise small and medium-sized companies on raising VC money, and I'd be interested to ask, particularly Malcolm, what impact you think token sales or ICOs will have on the traditional VC model.
Yeah, I think the first impact is disruption, because the VC model, I'm not through my career, I haven't really had too much interaction with VCs until of late, but my understanding is it's been pretty much the same approach to the business for many years, and this has come out of the blue, and it's effectively token sales. I think the figures for the last 2 years have been 1.2 billion, and it's a disruptive influence. I think that's the first thing, and it's probably a wake-up call to an existential wake-up call, if anything, because it's an entirely new model. How the VC world reacts to that and responds is entirely up to them, because it's clearly going to impact them when they see either as a threat or an opportunity, and those are the only two ways they can see it. So if it's seen as a threat, then how they're going to behave towards it. I think they'll probably go through the protectionist way of thinking. As an opportunity, well, that's what I think everyone would welcome, because there's no question there's room for VCs in this space. They just have to appreciate that the rules have changed. The technology is going to support them tremendously, because if they actually embrace that, then they'll see that, okay, they might not be able to take the proprietary approach. They'll have to sort of consider themselves as part of the mix, and where it goes from there, who knows?
Just on that point, I think it's been 1.7 billion so far raised in ICOs this year. Expect to go over 2 billion by the end of this year. VCs are well down, about a third of that. They know that this is attacking their market. They're worried. And this is why people like the exchanges want to get involved and find out more how the ICO market works and how they can manipulate it or get on board with it.
Just one quick point on that would be that tokens can come to market very quickly. I know VCs, they have to, the Series A, the Series B, it's a long game, you let things happen. Doing what Kryptonite One does is quite amazing in some regards, because we can invest in a project and have price discovery on that project within a week. We can then take out what we put in and go into 3 more projects 2 weeks later. Some of the uplift on, as everyone knows, some of the uplift on these tokens can be, if you've picked correctly, can be quite extraordinary. So, the frequency with which you can invest and being able to manage your risk almost instantaneously, because we haven't got enough of this, we need to get more, or we think the price discovery's been great, but we have a more exciting project coming out. That freedom and flexibility to move, very quickly, essentially, means that the VCs really need to look at this, because we do have some equity, but in some projects where those projects just didn't have a token layer at all, and some projects, some businesses just don't work in the token space, and that's something else to think about. But it's so you couldn't go backwards from where we are. We're so used to being able to move so quickly.
Well, I suppose just continuing on that theme, what's your forecast for the trajectory over the next 3 years?
That's a good question. I think what's happening is because ICOs are now a thing, a lot of money is moving in. As humanity, we're going to try everything. We're going to have token layers in all different kinds of companies. Some of them are going to work and some of them aren't. And I think over the coming years, we're going to, because this is effectively a big experiment, we're going to begin to see quite clearly which types of businesses lend themselves to the token layer better, which kind of companies have managed to work out the economics, and because you kind of have to go through the process of seeing how successful these projects are to work out whether the dials that they twiddled at the beginning of their business were correct. And so I think, generally speaking, this is going to be a huge. I almost can't quantify how big it's going to be. If we work out a way to tokenize everything, then these things will move. What you need to do that is you need the law and the regulatory space to come in behind the token world and say, we recognize this. So, if you were to tokenize an oil tanker, someone needs to say, yes, that token represents that asset, and then that token can move around. So it's almost unknowable how big it's going to be. But are there going to be failures? Yeah, there are.
George, I think you said it very, very well. I think that we are right at the very beginning of this, and Bitcoin's not even a teenager yet. And yet, you've seen these vast things. I remember thinking, I'm priced out at $40, and then, $400, it's too late, and then now we're at, $4,400-ish this morning. And there's probably a lot of people thinking, well, I'm priced out. Well, what are we? We could see another order of magnitude. It's a finite resource, and that's one of the things that's really important, is that people don't understand that there's necessarily a store of value in a blockchain model that has a finite resource. If you've got a finite resource, it's better than a fiat currency, which you can print as much of as you want. People say, but what's it backed by? I get this question all the time. What is it backed by? Well, it's backed by the algorithm, and it's backed by the fact that it's transparent and people can see what it is, how it works, and the fact that it's finite. So whilst humans perceive gold to have some value through our, a dog doesn't look at a bar of gold and think, crikey, That's great. It's only a human value that we put on gold, and mostly through its rarity. But if somebody just found a mountain somewhere and knocked the lid off it and realised it was entirely made of gold, the price would collapse overnight. Whereas that's not going to happen to your blockchain models that are working, because they can't make any more. Even if you want to, even if you will it, you're not going to find a mountain full of the stuff. So I think the future is really, really, really bright for cryptocurrencies. We're at a very, very early stage. And if you do pick the gems now, that uplift is absolutely fantastic, yeah.
There's nothing to stop non-blockchain companies tokenizing assets, but the key to the power of this is when you combine blockchain and tokens and the network effect. That's what we're talking about here. You know, this is revolutionary technology. I'm you know, I have to be an optimist in this business, and I'm pleased to be an optimist. But you know, I think that you can't really you can't get away from how revolutionary this technology is. That's the key, and so it's to do with the power of blockchain and then tokenizing. You know, there's no limit, as George said, to what you can consider tokenizing. Some will work, some won't, but there will be some powerful things out there, I'm sure.
Now, your point, I try to explain, going back years ago, you know, what's a cryptocurrency, you know, and I say to people, well, you use them every day. You go into Tesco's and you get a reward point. That is just out of nowhere, you know, and they give you a reward point. And then you can go and exchange that for fiat money and buy goods in their store. So there's, you know, your point is absolutely right. What's so beautiful now, or what's so great now, is the innovation that's coming out and the thought processes. And now people want to, you know, your point of, can we go beyond blockchain? I personally think we probably could. You know, someone out there be going, hang on, I can actually use this idea in this situation. So I just love what's coming out of universities and the youngsters. I go to these coin scrums, and the innovation is absolutely superb out there. So it's an open, you know, white field or whiteboard, and you're absolutely right. I think it can be open outside blockchain.
Just want to make the final point on that. It is the trust that is key, is what blockchain gives the voucher. You know, that you will only redeem a voucher from a shop if the shop honours it. There's no question in this with blockchain about the.
Yeah, but you've got the DAO and you've got now a lot of scams.
Yeah.
So,
but that's not the.
You have this on Kickstarter as well. So my point is really, it's just a different technology that we use to do something we are doing already. So are we talking too much about the technology rather than a service or something we have to do?
Well,
it's okay that it's open to more people, but if that's sort of disrupting the Kickstarter model. If that hasn't disrupted, if the crowdfunding hasn't disrupted the VC, for example, why we're talking now about
what it's trying is decentralise it. That where the trust is,
Yeah.
decentralising it. So you're not only like Tesco's. You trust Tesco's to give you your money back on your points. So with the blockchain, you're trusting everyone in that community. So you've got more stability, I suppose, is for want of a better word.
There's a few. You're right in the sense that the stack is being built currently, and Kryptonite One's main interest is getting a position in that Web3 stack. But there are decentralized applications that you could point to say this is a great example of a entity that's going to use that stack. One example, which was also useful when thinking about tokens, is a project called Augur, wherein here you have a decentralized prediction market that's using the Web3 stack, but the machine inside Augur, the group of smart contracts, can't work out the answers to its own questions. So people come to the market, they say, who's going to win, Hillary Clinton or Donald Trump? The machine doesn't know who won. So what it does is it produces a token called a reputation token. It sends them out to the world, and it rewards people who hold those tokens for telling the machine the correct answer. So without that token, that system just doesn't work. And so the prediction market is fully decentralized because it's on the Web3 stack. It's permissionless. Anyone can take part in it. I think it's probably going to be one of the most disruptive businesses, well, the most disruptive thing I can imagine. I mean, people will be able to take part in every stock market on Earth. Everyone will be able to hedge against weather patterns and, I mean, all manner of things. We can't even imagine what this platform's going to do. But in terms of, to answer your question, the token is so integral to what that project is. And it's a great example of the kind of application that will sit on that stack. There's one other called Funfair. Well, there's many others, but Funfair is another one which is really interesting in terms of using that stack and changing the casino model, the casino game model. So there's two examples I'd give.
Do you mind if I add a little part? Sorry, just to add one more thing, which is coming back slightly to regulation, which is one of the main ways that people plan to regulate cryptocurrency markets is through the regulation of the exchanges, because the exchanges have to be based somewhere, and yet as soon as that fear of the noose tightening around the exchanges, we're now seeing decentralized exchanges starting to appear. So there's a model that works really well. If you live in a country that is oppressive perhaps, and you have access to a cryptocurrency which maybe allows you to fight against that oppression slightly because you're not using any governmental controlled asset, but suddenly you've lost through governmental control your ability to exchange that. A decentralized exchange overcomes those borders and allows you to exchange that asset for something else. So I think the fact that the decentralized model can be taken on and on and on, we haven't even seen the start of it, exactly as George says.
The word "should" is unfortunately not going to be probably what it ends up. It's who will, and that's where I think probably everyone would worry, because if it's up to the traditional model, then they're not likely to get it right first time, maybe not second time, maybe not third time. Leaving regulation, self-regulation, I would be I don't know how effective that's going to be. It would be nice to think it could work. I think that there's probably, what I'd like to see is a open, the traditional bodies acknowledging how little they know, understand, or have the ability to actually influence effectively with a regulatory framework, combined with perhaps a trade industry association who would sort of legitimize what is actually happening when there are moves to pull that together on a sort of pretty high level, which is encouraging to see. And I kind of think that regulation has to be thought of differently, because we've seen regulation for oppressive regulation, like with BitLicense, which was designed for one purpose, and that was just to stamp it out, and that didn't work again. But equally, it's I like the idea of principles-based regulation as well, where you sort of look at people whether they are considered fit for purpose, and I like the idea of flexibility. But what are your objectives? Do you want to protect consumers? How much do you want to protect consumers? Is it right to actually stop people losing money if they actually are hard-nosed, focused on actually losing money? Should there be more sort of could it be looked at more as gambling than investing? Those are all very important questions, because it opens up a whole new world. I think the traditional way of looking at regulation is not going to work, and it's just not going to have the right kind of outcome.
Being in the Bitcoin world for 5 or 6 years, they were very pro self-regulation, but we've seen what's happened, and I'm not in the world of caveat emptor, which is what they believe. It's tough if you get burnt. So I want to see our industry regulate. I'm an evangelist for cryptocurrencies, and so I can see the benefit of it. I can see what good things it can bring to the world, and I love the innovation that's going on. So we do need to sit with the regulators and the business world and say, how are we going to get the best out of cryptocurrencies? And I'll just leave you with a thought. Christine Lagarde yesterday said regulators now need to focus more on not just financial entities, but on financial activities. And this is a financial activity, and so it is coming. You know, the world is looking, and I just want to, you know, I see the good things in it.
So I'd really like to thank our panel enormously for a highly engaging discussion on a cutting-edge, disruptive area. There will be networking and drinks in the foyer afterwards, so please do stick around and chat with the panel and other members of the small cap community for as long as you feel that you want to. Please join me in thanking the panel.